Well, we've had it since 2014 and again in 2016. In 2010 and 2014 and 2016, I thus got to know him. I spent 4 years doing it. What took you so long? He asked. We invested $400 million between 2014 and 2016, and at its height, we made almost $5 billion. 3 years ago, we sold nearly a fourth of our stock, and now we made about $4 billion. But how much do you currently own overall? It's a significant POS percent of our assets, but I can't recall how many. It represents 7 or 8% of our overall assets. What do you think then? Consider this compensation package. This compensation plan was previously authorized by shareholders. After being reversed by this Delaware judge, it will now be returned to the stockholders. How are you going to vote for your shares? We're voting for. Let's discuss taking big risks and acting boldly in the realm of investing. The Barron Partners Fund and Ron Barron are essentially the legends, the veterans, and the specialists when it comes to this tactic. Consider this situation. They made significant investments in Tesla rather than merely making small investments here and there. They made a huge investment, purchasing a 30% long stake in the business. This indicates that they have a big stake in Tesla and have placed a large wager on its success. Why is this impressive, then? Although owning such a sizable investment is a bold move that few people are willing to do, it also demonstrates a strong belief in Tesla's competitive advantage and potential for expansion. Therefore, if their initial investment didn't excite you, the magnitude and boldness of this move may convince you otherwise. They made an incredible $5 billion out of a cool $400 million. It is more than just a favorable return on investment. Financially speaking, that would be equivalent to transforming a small flat in the city into a vast space colony on Mars. They were producing 2,000 automobiles annually when I first met him in 2010, and by 2014, that number had risen to 31,000. We began purchasing at that point. 76,000 vehicles in 2016. 1,008,000 last year. Significant progress was therefore made, and he pledged. He would receive this unusual remuneration if he reached these benchmarks, which include EBITDA, revenues, and market capitalization. According to the pay, the market worth of the company was $53 billion at the time of his start and the signing of the contract. It reached $1 trillion, I guess. Now it stands at $550 billion. We will likely make 4 or 5 times our money again in Tesla within the next 10 years, in my opinion. Speaking of expansion, let's turn our attention from the financial numbers to the production lines, which are where the rubber meets the road. Bring yourself back to what may appear to be the bygone era of 2010. At the time, Tesla was only making roughly 2,000 vehicles annually. It was a modest start, similar to a niche product being created by a boutique automaker. However, by 2016, the situation has drastically changed. At that point, Tesla was not merely experimenting with auto manufacturing. Rather, they were becoming experts in it, increasing their output to an astounding 76,000 cars a year. You read correctly. In just 6 years, they went from 2,000 to 76,000. That's not merely expansion. It's a revolution, turning Tesla from a little player into a significant force in the car sector. In just 6 years, Tesla transformed from a small, charming bakery to a massive, space-based donut factory. With those figures, the market value soared to an impressive $550 billion. You may be asking yourself, what's the secret sauce here? Is it Musk's magic, the eco-friendliness, or the elegant design? Whatever it is, Tesla is producing cars at a rate that is, trust me, almost as quickly as I lose my socks in the laundry. Additionally, Tesla is increasing shareholder value more quickly than a teenager can spend money at a mall with each car that comes off the assembly line. Furthermore, his directors aren't only flakes, as you may have the impression. There are, for example, Kathleen Thomas of Walgreens Boots, Hiro Mizuno, who oversaw the Japanese pension fund, which is the largest in the world with $1.5 trillion, and Larry Ellison, one of the richest individuals in the world. Therefore, he had actually, and of course, Robin Denholm, who arrived later, approved this, and they all fit this with a fair agreement. Imagine yourself at a high-level boardroom, where excitement is in the air. All of a sudden, someone casually nods in favor of a $1.5 trillion transaction. Yes, it is a trillion with a T, a figure so enormous that it is difficult to understand in terms of everyday life. This is not a movie scene. For Larry Ellison and his colleagues, this is just another ordinary workday. For them, talking about numbers that have the power to completely change economies is just a. For example, I would only need $1 trillion decision to retire today if I had a dollar for each one that was made. You ask yourself, how did they make it? When you look at Apple, Nvidia, etc., they had something that was good for gaming, so they made it. Well, when Amazon first appeared, they were a book vendor. And have a look at what resulted. Tesla. For the other companies, the cars will be like books or games. For them, cars are a business. All this other technology is theirs. This business will grow to be quite large. I adore Tesla. Hold on to your hats or your financial portfolios because Ron Barron sees more than just automobiles when he looks at Tesla. He sees Nvidia and Amazon as the next big thing. We are discussing a transition from an automobile manufacturer to a software and technology behemoth. The transformation of a shy youngster from the back of the class into a rock star is similar, but this rock star also sells solar panels and makes rockets. Talk about a makeover. As we navigate these financial echelons, keep in mind that, in Barron's opinion, investing in Tesla involves more than just purchasing stock. Purchasing a piece of the future is the goal, and we might be on the elevator to the stock market's penthouse if Ron's predictions come to pass. Then, as a new shareholder, you would suffer. You are investing in a corporation that has some of the best executives in the world, possibly the best executives in this country, managing your enterprises. I mean, do you really want to treat him badly? You know, last year there was, Tesla employs 140,000 people. As an example of how attractive it is to work there, graduates from the best engineering schools are most interested in careers at SpaceX and Tesla, which rank first and second, respectively. Tesla hired 12,000 new employees last year. Also, they had 6 million applications, so they hired 12,000 new employees. 12,000 positions with 6 million applications. Therefore, consider that. The reason they have it has nothing to do with an automobile or the name Tesla. He is the reason for it. Therefore, consider his capacity to draw these outstanding individuals to this company, to expand and manage it, and to implement improvements that will benefit the entire world. And you want to back out of an agreement you made with him, a contract. Yes, let's go through some rough waters now, as even titans like Tesla encounter bad weather occasionally. Elon Musk's compensation package was the center of attention recently, and it caused quite a stir, to put it gently. This was no ordinary boardroom conversation. It turned into a heated conflict that attracted widespread notice. Votes from shareholders expressed a range of views regarding the fairness and magnitude of Musk's compensation. However, a Delaware judge intervened and reversed the initial ruling just when it appeared that the issue was resolved. The financial community was shaken by this sudden turn of events, which seriously threw a wrench in the gears and broke the consensus. It serves as a sobering reminder that corporate governance rarely goes as planned, even at the highest levels. What if you were promised the world's largest pizza?